Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 22nd of April to the 26th of April 2019. As always, we're going to start off by looking at the US dollar index and oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, starting with the US dollar index. Now, last week we had this pullback in this retest of the 97.37 area. We actually traded in this with quite some strong momentum and we stopped just shy of the 97.52. Now, going into this week, we are still looking overall for potential declines in the US dollar index. However, we have to bear in mind that we have traded into this in the near term. We are still trending to the upside despite the fact we're looking for potential reversal in this area. Now, last time we traded into this area, over here, we said we were looking for a decline down towards the 96.81, and you can see that we did actually get this move down towards the 96.81. So very simply put, we're looking for a replica of this move over here. If we start to see the right kind of bearish formations and patterns in this area, we're going to be looking for declines down towards the next key of support to the downside and the target set, the 96.81. Now, just because we're looking for a replica of this previous move to the downside over here, it does not mean this is going to happen straight away. And if we go back and have a look at the price behavior over here, you can see once we traded into this, the following move was actually this. And actually, between there, you can see we actually started to form a range, and we would consider this somewhat neutral. So very simply put, because we are still trending to the upside and we have this momentum to the upside, but we're at an area where we could start to see declines once again, we are going into next week with a bearish to neutral bias on the US dollar index. And what this means is, because of the risk of going into a correction next week in the dollar index, we're going to be trading the markets on their own merit without a very strong bias in the US dollar one way or the other. So next market we're going to look at is crude oil. Now, the near-term uptrend in crude oil is still intact, and as this is the case, and whilst this is the case, we are still only going to be looking for further advances to the upside. As long as we sit above the 63.150, we're going to consider this uptrend as staying and remaining intact, and therefore, going into next week, we are looking for further advances to the upside. We already have a correction back down towards the 63.150, which you can see we tested over here. The area we sit now, and possibly even one more retest of the 63.150. This is an area we are now going into next week going to start to look for bullish formations and patterns. And if we get the right kind of bullish setups in this area, we're going to be looking at initiating longs up towards the next key area resistance to the upside and the target set at the 65.89. And if we can get a breakthrough here, we're going to be looking up towards the next key area resistance to the upside and target 2 at the 67.15. So the next market we're going to look at is euro dollar. Now, last week we had this pullback in the euro dollar, and we currently sit at an area you can see in the past has been a congestion zone a number of times. We have zoned this area very similar to the US dollar index just because these two levels are very close together and we would not be looking at trading inside this area. So as a result, we just zone this whole area and we use this as a buffer. As long as we sit above this area, we are only looking for further advances to the upside. TFT members who we train in a live environment every Monday morning can see straight away that we do not have any reversals here. So we have to be patient when we're looking for these bounce points. We have to be patient and wait for tradable setups to come into the market. As it stands, very similar to, as I said, looking at the US dollar index, but just inversely, we have traded into this area with strong momentum. So we need to be patient and we need to wait for these patterns to develop. But very simply put, we are sitting at an area now which has the ability to push the euro dollar to the upside. So very simply put, the setup we'll be looking for going into next week, if we can get in this area, and we may come down for one more test, if we can get in this area the right kind of bullish formations and patterns, we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set at the 1.1341. So the next market we're going to look at is pound dollar. Now, we start the week below a key area of broken support, looking to potentially turn resistance at the 1.30290. We are looking further declines as this is structured to the downside in the near term. If we can get a pullback, and preferably if we can get a retest of broken support turning resistance at the 1.30290, this is going to be a great place to start to look for bearish formations and patterns. And if we get the right kind of bearish formations and patterns in this pair, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.2960. Now just bear in mind that the 1.2960 is quite a hard support level, and this is an area we could actually see a bounce in the pound dollar. So any shorts would need to be managed as we trade into this area, and if we are going to start to look for targets below here, we really would have to break through here first just to make sure, as I said, that we do not get that bounce in the pound dollar at the 1.2960 area. So next pair we're going to look at is US dollar Japanese yen. Now, as we discussed last week in previous videos, we were looking at this bounce from the 110.92, and we did bounce and we rallied from this area, and we were looking for a target up here at the 112.230. Now, we haven't yet achieved this. Last week we were essentially saying the same thing, and we did nothing in the US dollar Japanese yen last week. So very simply put, we are still looking for a final push up into the 112.23 in the US dollar Japanese yen. Might have a little bit of a correction first. Either way, once we get into the 112.230, you can see we have once again two key areas of resistance very close to each other, which we wouldn't be trading in between because it's too small. So we just zone this whole area here, and this is an area in the US dollar Japanese yen that we're going to start to look for bearish formations and patterns. And if we get the right kind of bearish setups in this area, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 110.92. So we have a target up here at the 112.230 because this was the target ever since we looked to bounce from the 110.92. It hasn't yet been accomplished. But once we take this target out, we will be looking for potential reversals back down towards the 110.92. So next pair we're going to look at is Aussie dollar. Now last week we had this correction back down towards the key area of support highlighted in last week's video at the 0.71270. We haven't yet tested this, nor do we have any reversal patterns to the upside. So very simply put, after a fairly slow corrective week last week, we are looking now this week for a potential retest of that support area at 0.71270. Anywhere in this area, but preferably if we can come back and retest the key area of support at 0.71270, this is going to be an area we're going to start to look for reversal patterns to the upside. And if we start to get the right kind of bullish formations and patterns in this area, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set at 0.7235. So the next market we're going to look at is New Zealand dollar. Now last week we had this big decline to the downside in the New Zealand dollar off the back of that CPI inflation data coming out of New Zealand last week. So very simply put, we are looking for further declines going into next week in the New Zealand dollar. If we can get a pullback towards broken support, looking to turn resistance 0.6740, and as always, if preferably we can actually get a retest of broken support, turning resistance at 0.6740, this is going to be a great place to once again start to look for bearish formations and patterns. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 0.6610. So the next market you're going to look at is US dollar Swiss franc. Now last week we were sitting at the 1.00100 area, and this was an area we identified as a potential place we're going to start to look for a rally to the upside in the US dollar Swiss franc and bullish formations and patterns. And we did have a really nice rally, and we ripped through the target set from last week. So very simply put, as we're still moving to the upside in the US dollar Swiss franc, we are not looking for anything other than long opportunities in the US dollar Swiss franc. If we can get a pullback, and a pullback will be preferable here because we're very close to the next target. So to give us some more room towards the target, some better risk to reward, we want to see a correction coming into the US dollar franc first. Preferably if we could come back and test the 1.00460, this would be a fantastic place to start once again to look for bullish formations and patterns. Because of the strength of this rally, we may not actually come all the way back to retest broken resistance turning support, but any correction down towards this support area is going to give us an opportunity to start to, you can counter trend these and look for an opportunity to go long. So very simply put, if we get a pullback, preferably if we can get a pullback to the 1.00460, any pullback in this area is going to give us the opportunity to look for bullish formations and patterns. And if we start to get the right kind of bullish formations and patterns, we're going to be looking at initiating longs up towards the next key area of resistance to the upside and the target set, the 1.0170. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside and target 2 at the 1.0217. So next market we're going to look at is the US dollar CAD. Now we've really lacked volatility in this pair over the last sort of 6 weeks, and we've actually been bouncing between this short-term range, the bottom of which is the key area of support we've had highlighted for a while now, at the 1.32060, and we've just been highlighting the fact that we are looking for long opportunities off of the key area of support of the 1.33060 in the bottom of this range. We are looking at some point for this range to break, and we're looking for this break to happen to the upside as the higher probability move, because the overall direction, the structure of the US dollar CAD is still currently, as we sit, to the upside. So very simply put, as we had this bounce last week from the 1.33060, we are actually looking for this now to come up and complete the target highlighted from last week, having had this bounce to the 1.3467. However, if we see one more push back down towards the 1.33060 again next week, as we have now once, twice, 3, 4, 5 times, this will once again be an opportunity for anybody who is not looking to be long from last week or even the week before. This would once again provide an opportunity to start to look for bullish formations and patterns, and we are once again going to see if we can take this target out to the upside, which we've had here for a couple of weeks now, at the 1.3467, and if we can get a breakthrough here, we're going to be looking up towards the next key of resistance to the upside and target 2 at the 1.3564. And last but not least, we have gold. Now, last week we were once again looking at the area at the 1284.10, which we've successfully traded a number of times in gold to the upside here. We were looking at this to be another area where we could potentially see a bounce in gold. And as you can see, and again, this is what we train our members to be able to see objectively, so they can see exactly when these markets are reversing and when they're not. We traded straight through this area. We did not have any reversal patterns in this area. We did not have any indication that we were going to once again bounce from the 1284.10 area like we had done previously. And having traded straight through here, we are now going into this week looking for further declines in gold as the higher probability move. If we can get a pullback, and preferably to give us the best risk to reward, if we can get a pullback and a retest of broken support, now looking to turn resistance at the 1289.60, this is going to be the area we're going to start to look for bearish formations and patterns, and we're going to be looking at initiating shorts down towards the next key area of support to the downside at the 1266.80, and if we can get a breakthrough here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 1251.00. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to everyone who has subscribed to the channel so far. I want to wish you all an enjoyable weekend, and I want to wish you all a very profitable trading week next week. The only thing left for me to say is take care, and don't forget to trade safely.